What's the final value? 88.2%.
Welcome to Nexus Premium Tutorials. Today we are going to discuss depreciation and provision for depreciation. Why do we charge depreciation? We're going to discuss depreciation as part of one of the principles under accounting or concepts under accounting. So let's start with an introduction to depreciation. An introduction. We're going to carry out, or we're going to discuss the theories first, followed by the calculation aspect of depreciation. Yeah. Now, what is depreciation? What is depreciation? Depreciation is the systematic allocation of a depreciable amount over an asset's useful life. Over an asset's useful life. So basically, we're talking about depreciation where we are going to look at how an asset over a period of time, okay, its value is decreased by way of its usage. That's depreciation. How the value of the asset decreases over time on account of its usage. Therefore, in depreciation, most of the terms we are going to look at are the systematic allocation and depreciable amounts and over an asset, the asset's useful life. Okay. Depreciation can also be determined when we have what is called a depreciable amount per the definition, when we have the depreciable rate. Okay, so usually the rate is measured in percentage. And we have a depreciable amount over an asset's useful life. Let's see about the methods of depreciation. Methods of depreciation. According to the generally accepted accounting principles, which is the GAAP, there are 4 methods of depreciation. And these 4 methods are: 1, the reducing balance method. Reducing balance method. The 2 is the straight line method. The 3 is the sum of years digits method. We have 4. Revaluation method and what? Unit of production method. So basically 4, 5 methods. Okay. Mainly what we're going to use today will mainly focus on the first 2, reducing balance and straight line method. Now we'll proceed with the factors affecting depreciation. So basically, if it's in an exams, what you first must do is you state the formula, the straight line method, one of the straight line method formulas for what? Depreciation, which is depreciation equals cost of assets minus either scrap value or disposal value all over what? The estimated useful life. So in terms of examination, you can use a pencil, write this on a question paper. Then you state the factors as follows. 1, the depreciation method to be used. It's one of the factors that affect depreciation. Depreciation method to be used. Second, the historical cost of the assets. Historical costs. of the assets. Then 3, the disposal value or value at disposal. Then 4, the estimated useful life. Okay, estimated useful life. So you can list these 4, and basically you should use a sentence each to give the definition for each of the factors which affect depreciation or factors affecting depreciation. All right. Another theory we will discuss with, as we said, depreciation is a systematic allocation, meaning that it is for a period of time. You can charge depreciation on an asset over about 3 years, and after 3 years, the asset will be disposed. Right? That's an estimation, estimated, or the estimation of the life of the assets in the business. And now it's an allocation. It starts particularly to one account, right? And then the amount to be charged on that asset by virtue of depreciation is the depreciable amount. Then the useful life or the number of years the asset will stay in the business. Let's do another theory. Pay attention. Okay. What are the causes of depreciation? Yes, give me some. Fire outbreak, earthquakes, and cold. All right. Then the third, obsolescence. The evolution or passage of time. What else? What else? It's finished. Inadequacies. So inadequacies. These are some of the causes of depreciation. Okay. Now, what are some of the reasons for charging depreciation? Were we given? What are the reasons for charging depreciation? Reasons for charging depreciation. 1. Any other? Depreciable costs. What next? To ascertain true or fair profit or loss. To reveal true or fair of the firm's position. Four, to provide funds for replacement. I would. So the,
to determine the true cost of the product.
5, to determine the true cost of a product for decision making. Are you good? So these are some of the reasons for charging depreciation. Why will the firm allocate a depreciation policy or adopt a depreciation policy? These are 5 reasons the firm would allocate, or for which the firm will allocate or adopt a depreciation policy. Are we good? Are we good? Any questions? Now we're going to solve a full question on depreciation, all right? Where we're going to solve a question on provision for depreciation, disposal, and others. So let's visit the document I've shared in the group and let's solve it together. Now we are taking a practical question under depreciation and we're going to solve. Now this is question 4. It says, Esinam is a trader who prepares accounts to 31st December each year. The following transactions with regards to assets have taken place. I, 3rd January 2018, purchased one plant and machinery for 200,000. I, 30th June 2019, purchased plant and machinery costing 500,000. I, 1st December 2019, purchased plant and machinery for 400,000. IV, 30th September 2020, bought plant and machinery for 600,000. SNR maintains its fixed assets at cost and depreciates its plant and machinery at a rate 25% on straight line basis. Depreciation is calculated on 1 month ownership basis. The plant and machinery purchased in January 2018 was disposed for 120,500 on October 1st, 2020. Required. Prepare the following: plant and machinery account 2018-2020. II, provision for depreciation account 2018-2020. III, disposal account. IV, statement of profit or loss extract 2018-2020. V, statement of financial position extract for the year ended 31st December 2018 to 2020. So whenever you have a question like this, you should first read through everything for the first time. Then the second time, you go in to critically analyze the transactions and respond to the requirements. So first, we'll begin by the name of the trader. SNR. SNR. And our first requirement is to prepare a plant and machinery account. So I, plant and machinery account. It's a T account. On the 3rd January. Already we have the year at the top. Right? At the top we have the year. Therefore the date and month comes here, 3rd January. You can either write it this way or 3 January for the sake of space. So 3 January. The amount involved is 200,000. 200,000. Okay, let me write it in full. So 200,000. Now, the description or the other account which is affected by this 200,000 is the cash account. Why is it a cash account? Because usually if a firm purchases plant and machinery, 2 accounts are concerned or involved in the transaction. A plant machinery account and a cash account. Because that is from the cash account the firm will take the money. Therefore, the cash account will have a credit balance to buy the motor vehicle. And the motor vehicle, to buy the plant and machinery. And in the plant and machinery account, cash will be on where? The debit side. So 3rd January, we are looking at the other account being cash, because cash will be credited, therefore plant and machinery must be debited. That's why cash is written here. In some instances, some books will have here recorded as motor vehicle, plant and machinery 1. That's the first purchase. Then we look into the other transactions. Was there any other purchase in 2018, or was there any other activity in 2018? Was there any other activity in 2018? No. Are you following?
Yes.
She worded it down. She worded it. Okay. So since there is no other purchase or transaction in 2018, the next action to be taken is that they bought the assets on the 3rd of January, meaning they use it to the end of the year. Are we good? So we'll close off this account. And on the same line where I'm closing off the account, it's the same line on which I'll draw the other line on the credit side of the account. Are we good? Now, we'll compare the two sides with the entries we've made so far. Which side has the higher of value? Debit side has 200,000, credit side has 0. So the higher side is 200,000. Then we'll write the same value there, 200,000. Then we close it off. So, on the debit side, since you have no value here, what will be the difference? 0 on the credit side plus what will give us 200,000? It's 200,000. Therefore, this becomes our balance carried down. And this balance carried down would occur at the end of 2018. Therefore, 31st December 2018. The interpretation is that they bought the asset on 3rd January. right? And they will use the asset from 3rd January to the end of the year, 31st December 2018. That will be the balance. All right, 200,000, the same amount. This is because they commenced using the asset from the 3rd January and they ended the year using the same assets. Therefore, in 2019, they will continue to use that asset. That's the interpretation. If I buy a chair in 2018 and I use the chair from January to December and I don't dispose it off, in 2019, I'll continue to use the chair. That's the interpretation here. Meaning 2019, the asset is still being used. Now let's check whether there was any transaction or there were any transactions in 2019.
Yes.
So, 30th June 2019, purchase plant and machinery costing 500,000 cedis. So, meaning that on the 30th June, the firm purchased another, or the enterprise or the venture purchased another plant and machinery. Therefore, you write under the 2019 year, 30th June, right? What was the cost? 500,000. Since it was a purchase, the cash account will be credited. Then here the plant and machinery account will be also debited with cash. This is the second purchase. Was there any other purchase made in 2019?
Yes.
Okay, so the third item, 1st December 2019, purchase plant and machinery for 400,000. So 1st December, again, cash. How much? 400,000 for 1st December. Now, with this concept, what we're trying to establish is this. If the firm started 3rd January 200,000, and then in the same year of 2019, it bought additional asset of what? 500,000, the same plant and machine. Then by getting to the end of the year, another asset was bought, costing how much? 400,000. Are we good? Was there any other transaction in 2019? No. From our question, there was no other transaction in 2019. Therefore, what we do is, now, having written 2019 here for the new year, I must correspond on the credit side with another 2019 on the same line. Right? Then I'll close off my transaction on the same line. And they should all fall under the currency sign. The currency sign. Now, when I add all these three, 1, 2, 3, I'm going to have 1,100,000. Since it is a greater value on the debit side, I'll repeat the same value on the credit side, 1,100,000. And then I'll close off the account. I'll close off the account. Now, also, whereas there is no other transaction in 2019, the interpretation is that all these three assets were used in the whole of 2019 because we don't have any other transaction existing. So when it began, when the first asset was brought down in 2019, by 30th June, the firm purchased another asset, plant and machinery. Then by December, another asset was purchased. So in 2019, the firm was using three assets. That's three plants and machineries. Three. First, one bought with 200,000, one bought at 500, another bought at 400. And they were used to the end of the year. Therefore, 31st December 2019, balance carried down 1,100,000 is the balance we are having. Meaning, where do we get this 1,100,000 from? It's the total on the credit side. Well, how do we come about the 1,100,000? It's the total on the debit side. How do we come about the 1,100,000 on the debit side? It's the total of all the assets. So in 2018, one asset was used, plant and machinery. 2019, the one bought in 2018 was brought forward. And then two more were purchased in 2019. Any question? Teacher, any question? All right. Then we proceed to 2020. Are you good? Now, it says 30th September 2020, bought plant and machinery for 600,000. 600,000. So before we will start with that, we have to begin with the 1st January 2020 balance brought down at a cost of 1,100,000. Meaning that in 2020, when we began 2020, okay, the total balance which ended the year, the total asset which ended the year, were all forwarded to what? 2020, or also began to be used in 2020. That's the interpretation. All the three plant and machinery, they all got to be used in 2020. Then in 2020, there was another transaction. Bought 30th September 2020, bought plant and machinery for 600,000. So 30th September, that is the year, bought plant and machinery for how much? 600,000. Bought plant and machinery for 600,000. Now, since the firm purchased plant and machinery, we will again write here as cash. Then 2020 on the debit side, again 2020 on the credit side, exactly below the closing balance of the previous year. Then it says that SE now maintains its fixed asset at cost and depreciates its plant and machinery at a rate of 25% on straight line basis. Depreciation is calculated on 1 month basis. The plant and machinery purchased in January 2018 was disposed for 120,500 on 1st October 2020. So there was another transaction on 1st October 2020, which was what? 1st October, there was a disposal of the first assets. Now, the amount at disposal, or the disposal value, was 120,500. We are not going to record this amount because this is an amount generated from selling of the first assets. However, we have to record the cost of the first asset bought in 2018, which is 200,000. Why should we record the cost of 200,000? To indicate that if when we bought it, we received it as debit. Recording it on the credit side of the plant and machinery account indicates that the item is no more in the firm or in the venture, or the item is no more being used by the firm at the same cost of 200,000. Why? Assuming we have a debit of 200,000, which we have, minus the credit of 200,000, what do we have? 0. I mean, the asset is no more in the business. We dispose of at that cost. However, should we have recorded this as a disposal in the plant and machinery account, it's indicative that there is a balance of the asset still being used by the firm, because the cost is 200, and then we dispose of at a value of 120,500. Therefore, the difference would indicate that portions of the assets of the plant and machinery bought in January are still being used in the firm. So to correct that error, we have to record the cost of the assets as leaving the firm, not the disposal value. Are we good?
Yes.
Are we good?
Yes.
So the asset bought on the first asset bought in 2018 was at the cost of how much? 200,000. That's what we have to record. Are we good? Are we good?
Yes.
Please follow. This camera. Do you have any questions? No, should do the editing. Do it before Sunday so that others who couldn't. Actually, I will have a class. That would be a full class for maybe on Thursday or Wednesday. Okay. Yes. Any questions? Any question? All right. Let's continue. So, having reached here, let's look at this. Having reached the end of 2020, we close off the accounts. And we'll compare the total debit side under 2018 to the total credit side under 2020. We find out that the debit side has a total of 1.7, right? And so since the total debit on the under 2020 on the debit side is more than the credit, we record that total over there. Also for the same as on the credit side, 1.7 thousand or 1.7 million. Now, we will find a difference between 1.7 and 200,000. We will find a difference, or the balancing figure, which will give us 1,500,000. This 1,500,000 is the balance carried down. to be sent to the ensuing year. Now, the balance carried out will be for the 31st of December. The interpretation is this. In 2019, when the firm was able to use 3 assets at the end of the year, how do you know they used these 3 assets at the end of the year? The total of the 3 assets gave us 1.1 million or 1,100,000, which was the same as the balance carried out figure, meaning it was used from 1st January, 30th January, and 1st December, and all 3 were used on the 31st December 2019, because all this figure, which is the 1,100,000, constitutes or comprises of the 3 assets. And then in 2020, the 3 assets were again brought forward or brought down in 2020, meaning the firm began 2020 using all those 3 assets. And then by the time of 30th September, it purchased additional or new assets, costing how much? 600,000. Then before the end of the year, on 1st October 2020, it disposed of the first assets at the cost. So if the firm is using 3 assets by 2020 and it disposes of one of the assets, which is the first one, how many assets should we use to the end of the year? 3, because now we have 4 assets. Cash 200,000, which is 2 years, so 1, 2, 3 assets, giving us 1.1 million, which is still used in 2020. So 3 assets are being used here. Then by 30th September, 1 more asset. So 4 assets were used by the firm in 2020. But before the end of the year, that is the 1st December, on 1st October, it disposed of the first asset bought at the cost of 200,000. So if the firm is using 4 assets, constituting or totaling 1.7 million, and by the end of the year, it's disposed of 1 costing 200,000, how many assets were being used by the firm by the end of the year? 3 assets. 3 assets. And these 3 assets, when we compute 500 plus 400 plus 600, they must give us that the total 3 assets which were being used by the firm at the end of the year, which is 31st December. Because 500, 400, and 600 gives us 1,500. When we take out the initial 200,000. So these are the 3 assets which were used by the firm at the end of the year, 31st December 2020. Therefore, the balance carried out in 2020 will become a balance brought down 1st January. So balance brought down 1,500,000. That will be our balance brought down. Meaning that in 2021, the firm having sold off or disposed of the first asset it bought for 200,000, it is going to use the 3 assets which it has outstanding for 2021. Okay, so let's continue. We finish with the I, the person I. Let's proceed to the II. II says provision for depreciation accounts. II. Provision for depreciation accounts. It's also a T account. Now, a little information on the provision for depreciation account. Provision for depreciation accounts it's usually the same as accumulated depreciation accounts, and both of them have a credit balance. Now they have a credit balance not because it's a liability, but because it has a contra entry. That's why the provision for depreciation, with the same as accumulated depreciation, has a credit balance. Should I continue? Provision for depreciation is the same as accumulated depreciation. They are just change of words. Are you good? And they all have a credit balance, because when you make a provision for depreciation, we are going to find the depreciation for each year, which is accumulated each year. You understand? Now we are not charging this directly on the assets. We are trying to find out the depreciation which will be accrued or accumulated each year and create an account for it. That is why we are providing depreciation accounts for the assets. Do you understand it? we are providing depreciation, provision for depreciation, we are providing a depreciation account for the assets for each year. So each year's depreciation, we have to have a general account to report all the depreciation on the assets each year, so that at the end of the useful life, or we can have an accumulated depreciation to compute what is called a net book value. Right? So the provision for depreciation is the same as accumulated depreciation. The concept is the same thing, right? And they all have a credit balance, right? When they have a credit balance, it doesn't mean they are actually liability, but they are some like contra entries. Are we good? Are we good? Therefore, in recording a provision for depreciation, the first side of the account to make the entry is the credit side, because that's a credit balance. Let's put it that way. Are we good? Okay. All right. Before we start computing the depreciation, we must first go and find the depreciations for each year. Now, we will go for workings, and we will prepare what is called a depreciation schedule. Hey, please, do you understand it?
Yes.
Are you sure?
Yes.
When you go, pick the same question and practice it, okay? I'm glad this one has a full question on the extract and co. We are going to cover all before we go. All right, let's continue. When I construct a depreciation schedule, in this very question, it is provided that we use one method of depreciation, which is called straight line. So in mostly, the question could be 25% on a straight line basis, or on a straight line basis, or using the straight line method, or 25% on cost. It's the same as using the straight line method to compute for depreciation. And here, from our question, we are having the fact that the depreciation is charged on a straight line basis. The depreciation is charged on a straight line basis. Therefore, we are going to compute it as such. All right. So let's start with a depreciation schedule. We will have here our year. Please pay attention. Our year. How many plant and machinery accounts were purchased? We have cash. Wherever we see cash, meaning there's a new plant and machinery. So cash 1, cash 2, cash 3, cash 4. So I'm going to have my year, my plant and machinery 1, plant and machinery 2, plant and machinery, plant and machinery 2, plant and machinery 3, plant and machinery 4, and I have my total. Total, I bring my cities, and then my year. You should be able to construct, you can write Ghana cities or cities. Let's continue. All right. Okay. So my year follow. I'll refer to my plant and machinery accounts and look at the first year I began. Which year did I begin?
2018.
So in 2018 there was an activity of purchase. Which other year? 2019. Which other year? 2020. So 2018, 2019, 2020. Then below that, I'll have my total. So total, Ghana cities. You should be able to properly construct it. All right. So when we take our plant and machinery 1, we would ask ourselves, was it bought in 2018 or was it used in 2018? Was it used in 2018?
Yes.
Another factor is that from the question, this plant and machinery or the depreciation charge of 25% on cost is on a monthly basis or on a 1 month basis, meaning that every month the depreciation was being charged. Therefore, in computing the depreciation for each asset and for each year, we must acknowledge the monthly charge on the depreciation. Are we okay?
Yes.
That's it. All right. So 25% on cost. Look at this. We are having 5% on what? On the straight line or on cost. So we are going to have 25 over 100 on or of the cost of the assets. The cost of the assets. Are you good? So for plant and machinery, which was bought in 2018, right? We will compute our depreciation to be 25 over 100. How do we know it was bought in 2018? Because from the plant and machinery account, the first entry was in 2018 when the asset was purchased. Are we good?
Yes.
So 25 over 100 times, what's the cost of the plant and machinery account? 200,000 times. Now, how many in accounting? How many months constitute 12 months? Sorry, how many months constitute an accounting year? 12. So over 12. How many months was the PMN one or the plant machinery first purchase used? For how many months?
12.
How do we know the number of months it was used? It was bought on the 3rd January, so presumably it was commenced usage on the 4th. And it was used till 31st December. It was at the same cost. So bought on the 4th January, used to the end of December. How many months? 12 months. So it was used for 12 months out of the accounting period of how many months? 12 months. Then you compute this on your calculator. What will be the value? Make sure you give the correct figures. 50,000. I know 50,000. Now let's proceed. Plant and machine, plant P&M2. Was it purchased in 2018?
No.
Look on the motor vehicles plant and machinery account. No. PMM3.
No.
PMM4.
No.
So in 2018, what's the total depreciation? 50,000. Then we proceed to 2019. Pay attention. 2019. In 2019 was PMM1 or the plant and machinery one, the first one. Was it used in 2019?
Yes.
What is the evidence? The evidence is, you look at the balance brought down, the same figure, 200,000, 2019. Meaning 2019, they started using the plant and machinery one again in 2019. When I buy an asset in 2018, like a check, and I use it for the whole year, and I didn't dispose of within that 2018, but took it to the next year, it means that cost still continues in the next year, right? So that's the interpretation here. It ended 2018, but in 2019, it resumed the year. So it was used in 2019. Are we good?
Yes.
Are we good?
Yes.
So it says you calculate depreciation for the PMM1, which was for the first year, for the 2019 year. In accounting, how many months constitute an accounting period? It should be 12 months. But how many months was this asset used in 2019? So we should look at the balance brought down is what? 200,000. And in 2019, 2 more assets were purchased in addition to the first one, which was from 2018, giving us a total of what? 1.1 million. We good? 1.1 million. Now that 1.1 million ended the year, meaning that in 2019, all those 3 assets were used at the time they were bought or at the time they were brought down till the end of the year. Therefore, from this 1.1 million Ghana cedis, we have the 200,000 there in the 1.1 million, meaning that the first asset which was brought forward in 2019 was used from the 1st January of 2019 to the end of 2019. Are we good?
Yes.
Are we good? Yes. So it was also 12 months again. Therefore, we are going to also have 50,000. Was plant and machinery 2 used in 2019?
Yes.
Okay. So we are going to compute the depreciation to be 25 over 100 times, what was the cost? 500,000 times, out of 12 months, how many months was it used? It was bought on the 30th June. So presumably, when will they start using it? 1st July. So the 31st December. How do we know it's up to the 31st December? Because it's in the cost of that asset is also in the 1.1 million. Are we good? So it's going to be how many months? From July to December, we have 6 months. It was bought on the 30th June. So presumably to commence on 1st July. So from 1st July to December is 6 months. And why do we say it's in December? Because this 500,000 constitutes the 1.1 million thousand, which was the closing balance, which was also the balance carried down. Therefore, it was used from 1st July to 31st December. 6 months. Are you good? Are you good? All right. Now, what's the figure?
62,500.
62,500. Was plant and machinery 3 used in 2019?
Yes.
What is the evidence? It was bought, this is the third purchase. First purchase, second, third purchase. It was bought on 1st December 2019. Therefore, we compute depreciation to be 25,100 times the cost is 400,000 times out of the 12 months. How many months did the third purchase or third assets last in the business? 1 for 2019, because 1st December, it also ended as 1st December. What's the proof? It's in the 1.1 million, right? So 1, what's the figure?
8,300.
8, 3, how many threes? 3 threes. 0.33. Okay, let's include a 0.33. 8, 3, 3, 3.133. The fourth plant and machinery asset, was it bought in the same year?
No.
So it's out. Therefore, we will add the depreciation charge on plant and machinery in 2019 to that of plant and machinery 2 depreciation charge, right? And that of the 3, and write the total on the right side, on the flank. What's the total? 120,000. 833. 833.33. Let's all confirm. Is it correct?
Yes.
Okay. Now let's proceed. 2020, was P&M1 used in 2020? Was it used in 2020?
Yes.
2020. How do you know it was used in 2020? The figure. The balance order is 1.1 million. Where did we get the 1.1 million from? From 2019. How do we get 1.1 million balance carried down? We got it from the total of the assets in 2019. And the first 200,000 is in the 1 million. That's why it's in 2020. Are we good? Are we good? So we are, since we are, why are we indicating over 12 times 12, 6 over 12, 1 over 12? Because the question provides that we compute the depreciation charge on a monthly basis. So we have to include the component of the monthly usage of the assets in a particular year. Therefore, in 2020, we're going to have 25 over 100 times what's the cost? 200,000 times out of the 12 months. How many months was it used in 2020? So let's look at this. We have the 20,000, 200,000 in the 1.1, but it couldn't be used to the end of 1st December. Why? It was disposed of on the 1st October. So on the 1st October, the asset was disposed of. Meaning it was used from January, 1st January, which is part of the 1.1 million, to 30th September, which gives us 9 months. Therefore, in 2020, the plant and machinery 1 was used for 9 months. Are we good? Are we good? Are we good?
Yes.
What's the total figure? What's the total figure? 37,500. Are we good? Are we good? Yes. All right. Plant and machinery was used in 2020? Yes. How many months was it used? So 25 over 100 times the cost is, the second asset is costing 500,000 times. How do we know it was used for 12 months? It began from 1st January. It's in the 1.1 million, which we got from this 2019. And it lasted to 31st December, right, 2020. after the first asset was sold or disposed of, the balance remains, which is 1.5 million, has the second asset in the 1.5 million. Are we good? So it will be for how many months? 12 months. What's the total? 125 000. Are we good? Are we good? Are we good? All right. Plant and machinery 3. 25%. What's the cost? 400,000 times. Also, the plant and machinery 3 costs 400,000. It began 2020 anew from January and also ended 31st December, which is also in the 1.5 million. Therefore, it's also 12 months. Therefore, 12 over 12. Why? Because after the 200,000 was sold off, these two figures, the balance carried down, or the difference, or balancing figure, which is 1.5, comprises the 500,000, 400,000, the second and third assets, and the fourth asset. When you add them, we're going to have the 1.5. So meaning after the first one was disposed, the remaining 3 ended were used to the end of the year, which constitutes the 1.5 million. Do we understand it? Matilda, you okay? Alright, what should be the figure for this? Come again? 100,000. Was plant and machinery 4 used in 2020? Yes. Yes, so 25 over 100 times 600,000 times. So it was purchased on 30th September, presumably to start to be used on the 1st of October, and it was also used to the end of the year, because the 600,000 is the 1.5. So it's going to be used for how many months? 3 months, so 3 over 12, which will give us. Now, so in 2020, the total depreciation for 2020 or in 2020 are the figures of PM1 depreciation charge, PM2, PM3, and PM4 depreciation charge respectively. So what's be the total? Are you good? Now, for PM1, now we found the total depreciations for each year. Now we're going to find the total the accumulated depreciation on each of the assets. The depreciation on each of the assets. Therefore, for plant and machinery 1, the depreciation in 2018, 2019, and 2020 are going to be added together. From here, we're going to have 137,500, and then we are going to have 187,500 for plant and machinery 2 accumulated depreciation. 187,500. Then for plant and machinery 3, we are going to have 108,123. Then for plant and machinery 4, we're going to have 37,500. Now, when we get to this last space here, the total of depreciation per year on the vertical side must be the same as the total depreciation for the assets on the horizontal side. So you must always verify before you write the final answer to help check for any discrepancies and for correction. So what is it? Someone should calculate vertically, the other should calculate horizontally. So we verify or compare the values. 4 33.33. 4708. Is that correct? 4708 33 point what? Okay. Are we good? Are we good? The third requirement says disposal account. Disposal account. The asset disposal account, pay attention. We are only, pay attention, we are only going to be concerned with the double entry in all the accounts we have dealt with. So, for example, in the motor vehicles account, the plant and machinery account, or the first account, on which date did we record a disposal? On which date? 1st October. Which year? So I also write at the beginning, I write 2020 here. Then also write what? 2020 there. Ghana cedis. We are going to the account. And then we will look at, and then we will ask ourselves, in the plant and machinery account, on which side do we record the disposal? In the plant and machinery account, on which side do we record the disposal? The plant and machinery credit. So if on the plant and machinery account we recorded the credit on the credit side, how much was it? 200,000. And 200,000 was the cost of the assets, right? So if on the plant or in the plant and machinery account, it's on the credit side. When we come to the disposal account, on which side are we going to record it? Debit. So which date was it? 1st October. You will say the costs. How much? 200,000. The double entry rule. If in the plant and machinery on the debit, on the credit is 200,000 disposal, we go to the disposal account, it will be on the debit, the cost. Motor vehicles account, plant and machinery. Yes, you can write costs or you can write plant and machinery, 200,000. It's the same concept, right? This is the cost of the asset, or you can write the other account from where this 200,000 is emerging. And it's emerging from the plant and machinery account. Are we good? Aisha, are we good? Alright. Now what next? Which other account has disposal? Okay. Before we go to the provision for the depreciation, when the asset was disposed of, it was disposed of for what? For cash. How much? 120,500. Meaning the transaction was between cash and disposal. Cash and what? Disposal. So if the transaction was between cash and disposal, it means in the cash account, which side of the account will be credited, will be entered, will receive the entry, debit. Because when they dispose it off and sold it for cash, the cash will come in, right? And the disposal account, it will be what? Credit. So cash, in terms of disposing the assets at the cost of 120,500, the disposal account will have, the cash account will have a debit entry of the amount, and the disposal account will have a credit entry of that amount. So if it's the disposal account, the same dates, 1st October, right? We'll write here cash. How much? 120,500. Do you understand it? So we've done that double entry too. We are okay with it. Are we good? We are okay with that double entry. Then, when we come to provision for depreciation, do we have disposal also in here? Yes, we have disposal right here. The same date, 1st October 2020. On which side? Debit side. So when we go to disposal, on which side will it be? Credit side. The same date. But where is the value coming from? Where is the entry coming from? Provision for depreciation account. So provision for depreciation account. How much? 137. You can write here either provision for depreciation or accumulated depreciation. But as I said, provision for depreciation and accumulated depreciation are the same. They represent the same concept. So the disposal is on the debit side. When you go to the credit side, since it's on the debit side in provision for depreciation, go to disposal, it will be on the credit side. Where is this 137,500 emerging? Where are we taking it from? We are taking it from disposal. Or where is 137,500 going to? It's going to provision for depreciation. Are we good? That's all we have. Rose. It's too early, eh? I know. So let's close up the accounts. We will compare the two accounts, the one with the higher of value, the two sides with the higher of value. Now here, we are going to have here to be, give the final value. 258,000 on the credit side. On the debit side too, 258,000. Because this is higher. The difference between this gives us what? 58,000 we will write profit or loss. You write profit or loss. If it's also on the credit side, you write profit or loss, or P or L. Meaning the firm had gained a profit of how much? 58,000. Are you good? That is all about the asset disposal account. Yes. So this can be replaced, provision for depreciation can be replaced with what? Accumulated depreciation. Are you good? Or provision for depreciation. Why did I say provision for depreciation? Because that's the name of the account. Right? But it's the same as accumulated depreciation. IB says we repair which account? IB says yes, what? Profits or what? Loss extract. Pay attention, pay attention. When I say according to loss extract, so we can also construct a T account for it. Are you good? Are you good? Then put our currency signs at the end. Since depreciation is an expense, are you good? Are you good? Since depreciation is an expense, are you good? We are going to record each year's depreciation in the statement of profit or loss what? Extract. Remember, we are not going to record the accumulated depreciation. In 2018, this is the total depreciation for 2018. In 2019, this is the total accumulated depreciation. In 2020, this is the total accumulated depreciation. Right? But in the statement of profit or loss, since for every given year, for any given year, we are going to record the yearly depreciation. Okay. So what is the first year of depreciation we have? 2018. I'll underline it. Are you good? Now, we will come to the P&L. This is profit or loss, right? That's the profit or loss. Which year was it recorded? 31st December. Right? Are we good? So 31st December. Where is it emerging from? This 50,000, which account is it going to? P&L. So 50,000 is the P&L. Where is this 50,000 coming from? For depreciation. So provision for what? Depreciation. Do we understand it? Yes. That is for 2018. Then we close it off. Why do we close it off? This is only going to be used to compete for depreciation for that year. Right? Then we proceed to which year? 2019. 2019, you go, since you are in the profit or loss account, you only search for the corresponding account in the period of depreciation. You don't need 50,000 on balance dollar. However, which one do you need? The P&L. That's the corresponding account. We go, which date? 31st December. Where is this 10833 going to? The profit or loss, right? 10833.33. Are you good? Are you good? Now, where is this figure coming from? Which account? Provision for what? Depreciation. You double underline. It's for only that year. Which transaction is next? 2020, right? Again, 31st December, right? Provision for depreciation. What's the figure? 300,000. We close it off. That is the statement of financial position extract. Are we good? Are we good? All right. Let's do with the last part. In the statement of financial position, pay attention. We are taking totals. We are taking totals. So this is the I, this is the D. Right? So we begin with what is called costs. Costs, Ghana cedis. Then accumulated depreciation, Ghana cedis. Then we have the net book value, Ghana cedis. Now, when we say net book value, another name for the net book value is called carrying amount. Alright? So it means that something must have been deducted from the book value for us to have the balance, which is the net book value. So here, the costs can represent the book value. That is the value of the assets in the books of the company. So the cost is the book value. And when we take out the accumulated depreciation, we are going to have the balance of the book value, which is called net book value. So the book value is the cost. It's the value of the assets in the books of the business or the company. When we less out the accumulated depreciation, we have the net book value. Why are we saying accumulated depreciation? Statement of financial positions contain totals. It only considers total values. Therefore, we would also begin, since it is also prepared annually, we also begin with the first year, which is year 2018. What is the name of the assets? The non-current assets. So in here is non-current assets. 2018, right? So 2018. What's the name of the non-current assets? Plants and what? Machinery. What was the cost for the plant and machinery 2018? This is what we do. You visit the plant and machinery account, search for the balance carried down. Search for the balance carried down. Those are the values we are going to record. So in the plant and machinery account, what was our balance carried down? So that's what you write at the cost, 200,000. What is accumulated depreciation? In other words, this accumulated depreciation is the same as what? Provision for depreciation. So when it comes to the provision for depreciation, you set for the balance carried down in 2018. Balance carried down in plants and machinery account. Balance carried down in provision for depreciation. How much is it? 50,000. So 50,000 over there. When we less it out, what do we have? 150,000. That is the net book value of the assets existing in the firm in 2018. Are we good? Then, which net year is next? 2019. Again, plant and machinery. Remember, we are not to write here plant and machinery 1, plant and machinery 2. Why? Because in the sale of financial position, we only consider total values. So all plant and machinery together, one account. Are we good? Alright, what is the cost? Let's go to the plant and machinery account. And at 2019, let's search for the balance carried out in 2019. It will be on the credit side. The balance carried out in 2019 will be on the credit side. 1,100,000. Good. 1,100,000. What's the accumulated depreciation? Come to 2019, search for balance carried out. 170,833. 170,833 point what? 33. What's the difference? What's the difference? So 1,100,000 minus 170,833. 929,166.67. We double underline, we close it off. Then in 2020, again, plant and machinery. Balance carried down from the plant and machinery account. Balance carried down 1,500,000. So 1,500,000. What's accumulated depreciation or provision of depreciation? We pay balance carried down. 1, 2, 3, 4, 5, 6. So 1, 2, 3 carried down. Are you good? Use the balance carried down values. Are we good? Are we good? That are you okay? Is that understood? So this is what you should do. This is monthly basis. Are you good? When you go, try and work on yearly basis. The difference between the monthly and yearly is that for the monthly basis, you compute the amount of purchase, right? The amount of purchase is computed, right? And the amount of usage. You have to know the amount of purchase and to know the amount of months it was used, right? And you give room for that. Are we okay? Are we okay? Are we good? The steps are made, but when you go, use this same question and solve everything again. Use the same question and solve everything on your own. Afterward, you can change the monthly to what? annually. Alright? When you comprehend the concepts, you'll be able to solve something.